Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at Bitcoin. But first, a quick word about the great benefits of becoming a member of the Green Star Trading Patreon. If you already appreciate the work I'm doing on YouTube and want to throw us a bit of extra support each month, then why not join Tier 1 for just £5 a month? You also get a weekly exclusive video not available on YouTube. If you join Tier 2 for just £10 a month, you get the same exclusive weekly video, but you also get a monthly deep dive video. You get early access to all other future YouTube videos. You get access to the Elliott Wave educational series, plus a bunch of other interesting trading educational videos. You get access to the public Discord, where there's a whole raft of channels where you can communicate with the Discord community, including one dedicated to asking me questions personally, where I always endeavour to get back to members as soon as possible. And then there's Tier 3 for £15 a month. You get all of the benefits of Tier 2 and Tier 1, but you also get access to my bespoke stock rating system and monthly dividend calendar covering all of the stocks that are up for ex-dividend that month and payment that month. Thank you for listening. Now let's get back to the video. Welcome back, guys. Right, so we're going to go over our Elliott Wave counts and we're going to go over some basic technical analysis as always. But I felt it was important to get an update out on Bitcoin, obviously, because of the recent price action. We've seen this big move to the upside. Now, I got an update out earlier in the week, actually end of last week, regarding Bitcoin, because obviously this price move came around so quickly. So I got that update out to my patrons. It was a Patreon exclusive. I did post it on the Twitter in case anybody wanted to join in order to see it, but obviously I'm going to give my members information as soon as I possibly can regarding any change in opinion, and I had a change in opinion. Now, although in the last video we were covering the same count as we've got here, and it's turned out most likely to be correct, I was expressing, hand on heart, feelings of uncertainty and general doubt over the price action at the time. I said it looked more corrective than it looked bullish, and well, it doesn't really matter what I thought at the time, does it? Because it turned out it was bullish, and we've since gone back up. So the count was, or at least appears to have been correct, which was the bullish count I was talking about, which was, let's just bring up the whole thing now, I've repackaged it, which was the idea that we had completed a wave 1 intermediate degree, and we had done a zigzag down into a wave 2. I spoke about this for a couple of weeks, and then we'd seen a 1 and a 2, and then now we've gone 1 2 1 2 3 4 3 4 1 2, so on and so forth, and now we're building up into a greater wave 1 again. Now, what I said at the time about how I was unconvinced by this price action because it looked corrective, I genuinely, honestly was. This move here did not look impulsive. This move does. So at the time, although I was still saying this was the primary count, I was starting to lean into the idea that we might be bearish and heading lower. Well, more fool me, as things turn around very quickly. So I got that update out to the patrons and explained how, given what we've seen from a technical analysis point of view, I flipped bullish, and until, or I should say while these lows hold, I will remain so. I will remain bullish now, because I have to assume we've completed a 3-wave correction here. Now, I've changed the wave labeling here, so it doesn't seem to make much sense, because we've got minor wave degree working into what would be intermediate wave degree. So this would be minor into intermediate 3, but I think all of this needs downgrading. But the problem is, obviously, the sheer amount of lettering, or numbering I should say, which is going to end up in here, is going to become confusing. So once the wave degree completes, I will then change the wave degree to the appropriate size, but the count itself is the best I've got at the moment. So let's dig into that count for a little while, because it looks a little busy, I know. Let's look at this completed correction now. We're just going to bring up our trend lines here, because I think I marked that. Yes, I did mark that as a triangle and a diagonal. Okay, so working up from the count we've had for a long time now, from a bullish perspective, we've had this move into a 1 and expanding flat into a 2. Then we've had 1 2 3 4 5 into minor 3, 4 ending diagonal 5 into intermediate 1, A, B, C into 2, and now we've started a wave 3. That is the bullish count, and my preference, like I said, for as long as these lows remain intact, that's now my preference. Such a strong push to the upside. So now the question is, what's going on in this more recent price activity? Well, I think if we just zoom in here for a minute, I think we sooner or later we're going to complete a larger wave degree here as well, and then we're going to reverse and have a more significant correction. Okay, that's just inevitable. So this very small time frame labeling I've got going at the minute can be adjusted at any time, purely because once we get down to these kind of levels, it gets very difficult to count accurately. We have to wait for a more significant move. As you can see, I've gone all the way down to the micro time frame here. So essentially what I'm seeing here is a 1 WXY into a 2 ABC flat pattern here in the X. Now, the reason I thought this was corrective was we came down in what looked like 5 waves, and then we went A, B, C, and then started coming down again. And then all of this looked very corrective at the time, hence why I was losing confidence in the bullish idea. But then we did this, and have flown up here. So far I'm counting this as a minute 1, 2, or minor 1, 2 into minute 1, 2, into minuet 1, 2, into sub minuet 1, 2, 3, 4, 5, 3, 4 minuet, 5 minuet, 3 minute, 4 minute, 1, 2 minuet, 1, 2 sub minute. Now we seem to be selling off here, so the likelihood of this end of this count being correct is less likely now. We may have peaked something more significant up here. So I think what I'll do is I'll just hide the bullish count for a minute, and I'll put an alternate idea on for the labeling that I think will probably make a little bit more sense. I don't think that we're in minor degree here, because I think if we're in the wave 3, this is going to be a much more significant move. So I think this will be probably 1, 2, and then there's 3, 4 and 5 to come at minute degree. I think is probably more likely. So let's just throw up a fib extension here for where we'd expect to see the 3 at the 1.618. So here's the 1.618. We've already come to it. So perhaps the 3 is coming in now around the 1.618. So then we'd get the 4. So this should be a retracement that does not come back above this level here, because this is the top of the 1. So we would not expect to see a retracement come this deep if we're still within the same wave degree. If we've completed a 1 up here, we could come deeper into a 2 again, and we've gone, 1, 2 intermediate, 1, 2 minor. But let's just assume for the moment that we're around the 1.618, so maybe we're in the same wave degree. So we'll get a 4, which will come in somewhere between the 23.6 and the 38.2. Around this level between the 23.6, 38.2 and the 50. So somewhere around here. Then we'll get a completion in the 5th, and then all of this I propose will be the minor 1, then a 2, 3, 4, 5 at a minor degree. So I like to keep things simple. I don't tend to count into the really small wave degrees most of the time, purely because the big moves just make so much more sense and just give you so much more clarity than counting your way through all of the small moves. So there you go. That's an alternate count there that I think is got some pretty good odds of being right, purely because the sub-wave degree here seems to be a 1, 2, 3, 4, 5 into a 3, and we seem to be selling off. Now we could go higher, and the other count on the smaller time frame with the smaller degree could be correct, but we seem to be selling off here. So I'm going to put that into minute degree, like so. And if I prefer this as price develops, I'll delete the count here and add this to the main bull count instead, so this will become a replacement. But yeah, that's what I think is happening off of the low. So we've had this 3-wave move down, A, B, C, and now we're going into a 1, 2 to find a larger 1, 2 at minor degree, and then we're off. We're off in a minor 3 of an intermediate 3 of a primary 5. So we should see a seriously explosive move to the upside. to come. But we've got to get this initial move and pull back over with first. This is the first shakeout after breaking a high or coming back to a high. You know, we tend to come back to a high, find resistance in that territory, right? We either break through it, which draws in liquidity because people are like, oh, we've broken out, let's get in. And then you will normally have a sell-off to shake out that dumb money that's just entered the market. And then that allows institutions and professional traders to come in at a lower price, buy it back up. And that's basically how a 1-2 works. You know, break a previous level, draw in liquidity, trap some people into some leverage trades, sell off, buy back lower, off we go. So that's going to happen at one point or another. Either we're going to do it soon at this degree, or we're going to do it a little bit later and push the count a little bit higher using the more broken down subwave count I've got. So that's my preference for the moment. I'm now much more firmly in the bullish camp after this move up, and I will be unless I see these lows broken. I know I've mentioned it a couple of times already, but I'm going to keep saying it because it's essential that we change our mind if that happens. We can't hold on to a bullish count if those lows break. Okay, if the high here breaks, I'm going to start getting suspicious. Because but that's only if I don't think we've completed this wave degree. That this would be a corrective move up before another move down. I mean, if this is a completed wave degree in 5 waves and we have a 3-wave pullback, I'd be looking to buy again. You know, I'd be looking to buy again. So if we have completed a primary wave 1, excuse me, I'm just doodling all over the chart here. If we have completed a primary wave 1, or when we complete a primary wave 1, I'll be looking to buy on the 50 or on the 61.8 again. And then we've gone 1, 2, brought around these lows, 1, 2, buy around these lows, and then we're off in the 3 of the 3. So then we're flying. Alright, so let me just bundle all this together. Okay, we'll hide that out of the way. So we'll just go back to our normal bullish count for the moment, which is the idea that we're building an extension here. This might still prove to be correct, 1, 2, 3, 4, but I think the wave degree is off. I don't think this is minor degree yet. If we've gone intermediate 1, intermediate 2, and this is now intermediate 3, then the target for intermediate 3 based off of this 1, 2 swing, and this is the minor target, is up here at 80 grand. Right, now the 2618 is up here at 105, the 3618 is up here at 130. So there's 3 big wave 3 targets above us. So I think to be calling minor wave degree this early is probably wrong. It's likely minute wave into minor wave into an extended 3 over 5. That's a very bullish count, admittedly, and that's probably what I'm probably would lean into, as the wave 5s of Bitcoin or crypto in general tend to be very aggressive. They tend to be a bit of a FOMO wave. Alright, so now we need to update you guys on the bearish count then. So the bearish count that we were working on is wrong. So that's something, isn't it? We finally had this confirmation. The idea that we're going 5, 3, 5 is not right. And the reason it's not right is we had a 1-2 swing here, 1-2 swing here was the bearish count at the time, but the 2 of the minute wave has come back beyond the 2 of the minor wave, which means we've retraced outside of this downward move, which means it can't possibly be correct. So if we are going to have any bearish interpretation, it has to now be different. We can't rely on this count anymore because it doesn't work. So what we're going to do is we'll keep it for reference, because I don't want to come back and forget what I was thinking, because that can always be handy. So we'll just rename it, I think would be a wise thing to do, and we'll say old bear count. Okay, so now an alternative is required. From a bearish perspective, I don't really have an alternate at the moment. The only one I have is an alternate flat, which would be this idea. Okay, completely different from the bearish count we were working with. So I know this is keeping things super simple for the minute. In fact, I'll just turn off that impulse from below. We don't need that. So this is the idea, right, that we've had a 3-wave swing to here. We will have a 3-wave swing to here, and then a 5-wave swing down, and we'll get a flat pattern. It will drag itself well out into next year. It will make a new high, and it will make a new low, and it will hurt as many people as humanly possible in the process, because that's the whole bloody point, isn't it? You know, we want to make sure that we get to sell and buy at the best possible price, and that means pulling in liquidity at both ends from the retail traders. So that is essentially that is a possibility. Now this B wave, if this is a flat, we're not going to consider this or think about this until we get to this level, 90%. This is the 89% fib. We call it 90, just rounding up, because that's the minimum retracement for a wave B of a flat pattern. So we could come up to the 90, and then we'll be on guard for reversal conditions, shift in momentum, bearish candles, you name it. All the stuff we'd be looking for to see if there's a potential reversal setting up, divergence as well between the momentum indicators and price. All of that should be looked up here for when we get towards the previous high. Once we get to within 90% of the previous high, there's the possibility that this is a wave B, and the 3-wave swing into a wave B, like this. At that point you should be on guard for reversal conditions, because it could be a 5-wave move down into a C. Now I'm not supporting this case, like I said, and I won't be thinking about this until we get up here. Then I'll start looking for signs that this could be the case. But the whole time I'm looking for signs that this is a completed 1, 2, 3 should take us well beyond it, 4, 5, right, and off we go. So that's an alternate bearish count. The final alternate count. Well, I've actually got 2 more to go through. One is an alternate bullish count, and one is an alternate neither bearish nor bullish. We've got this triangle idea. Okay, so I don't like this, and not everyone, but a lot of people seem to be suggesting this, but I don't like it. Now let me explain why. This is 5 waves to me. I've said it so many times now. I'm getting tired of it. You can't have 5 waves into the start of a triangle. That's just a big no. You just can't do it. It doesn't happen. It has to be 3 waves. End of story. That's it. And if it's going to be 3 waves, we'd have to say, well, it's this expanding pattern for 3, right? Yeah, okay, that's 3 waves, but that's not what I want to see into the A wave of a triangle. I guess it's technically possible, but I want to see a zigzag into a triangle, and I want to see a pretty evenly distributed zigzag into a triangle, okay? And we haven't got that here. We've got what appears to be 5 waves. Hang on guys, you'll have to excuse me for one moment. I'll be right back. Okay, we're back. Sorry about that. Yeah, so as I was saying, I would expect to see 3 waves into an A, not 5, because you literally can't have 5 in a triangle. So that's that. Right then, so I don't like this idea, but it is one of those things which seems to be cropping up in other people's counts. So unless they figured out a way to count this as 3 ways that I can't see, I have to give them the benefit of the doubt and say there's some respectable Elliotticians out there who I've got some time for, and some of them are considering this, so fair enough, I will too. But it's not my, what's the word? It's not my favoured interpretation. I'm still going to sit on the side of the bulls for the moment. That we've done a 1, we've done a 2, we're now working on a 3. We will get a smaller 1, 2 and a significant pullback at some point, and then it will be the 3 of the 3 and off we go. I'll hold that opinion unless these lows break. And yeah, that's my view on the bullish count. I did have one more alternative. We've done the flat we spoke about. That's the only bearish view I can see now. I guess technically, okay, I guess it's possible that this is a 1 and this is a 2. But problem is, this does not look like 5 waves to me. This looks like 3. Okay, so unless there's some kind of 1, 2, hugely disproportionate 3, 4, 5, I don't like that idea. But if this was correct, then you could go 3, 4, 5. Right, but like I said, this looks like 3 waves, so I don't think that's likely. And if this high breaks, it's completely impossible. It literally can't be correct if this high breaks. We're not quite there yet, but if it does, that's any hope of a short-term bearish count gone. Okay, in terms of making a new lower low. So from that perspective, let's get rid of the alternate flat. Alternate bull short-term. Alternate 2. Yes, this is the only alternate I can think of. The only other alternate. And as you can see, it's moved since I placed it. It would now have to be here. This would now have to be a C. And this would now have to be an X. And this would now have to be a Y. But as you can see, even if we get a WXY, which is slowly becoming impossible because we're getting very close to taking out this high, right, and we don't want an expansive X wave. An expansive B wave we can live with. So 335, maybe this could be ABC flat if we come to a new high. But the thing is, even if it is ABC flat or it's WXY and we turn around now, all we're doing is coming down into a deeper 2. We're not going to make new lows in this scenario. So this actually just becomes an even better buying opportunity. Okay, so there's nothing negative about this. So in the short term, unless we were to turn around now, like literally now before taking out this high and impulse our ass down here and take out these lows, I see no reason to be bearish. This is the only short-term bearish view I can see, and it results in a move down and a move back up. So for me, over the short term, I'm bullish now for as long as the previous lows hold. And yeah, that's it really. That's the Elliott wave count as I see it at the moment. I know it's a lot to think about. There's a lot of alternatives, but once you eliminate a seriously considered bearish count like the one we've just done, there's a bit of a scramble to find new ideas. And you've got to scramble to find new ideas because you've got to have an alternate possibility. It's fine to be bullish, but if things change suddenly, you've got to have a clue, an idea of what's going on. And the only way you're going to have an idea of what's going on is if you've got alternative ideas, you've got options to consider, and that's what we've done here today. So to sum up, let's try and sum them up now. Okay, this is our short-term bullish count that we're coming up into a wave 1 soon with a bigger retracement in a 2. But we're still bullish and going to head higher. We've got our main bullish count, which is we're building some kind of extension here, and we're going to head higher into another wave degree before we come lower, in a retracement before once again going higher. We then have a flat idea, which is we're not going to worry about until we retrace at least 90%. So until you get all the way up until 60,000, 61 let's say, and we'll put this in the alternate flat folder. And we'll lock it in place. Until you get up to here, you don't need to think about this, because only once you're here will we be looking for the possibility of this being a completed wave B. So that's an alternate bearish. That is the only truly bearish option I see, which could take us to new lows. So something you need to observe at that point. You've got the triangle, which I think is kind of pointless because it doesn't start right, and you can't understand any of it until you've completed wave D. Right, because you can't measure C to A until you've got C, right? And you can't measure B to D until you've got D. So until you've done A, B, C, D, you can't really be sure that it's not a free wave with an impulse down or two waves with an impulse up. Until you complete that, you can go, yeah, alright, then it's a triangle. But calling it early doesn't really help because you don't know, do you? You have no idea if it's correct. But we'll leave it. So, right, that's enough Elliott wave talk. We're going on and on and on. So let's do some basic technical analysis to wrap up the video here. And there's a few things that I do think are quite compelling. So, broke the parallel channel. That's the first thing I would point to. We broke this parallel channel, came down in 3 waves, ding, 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 pinball, 1, 2, out of the channel, done. So that's pretty compelling. Let's bring up our moving averages. Where did we find support? 250, right? Some people use a 200 moving average. I use a 250 because there's 250 trading days in a year, not 200. So it's just my personal take. Wick through it, body to it, wick to it, wick to it, body to it, wick to it. Right, put 1 wick through it. Did not want to body below the 250 at all. Strong support, stayed there, bounced. So that's cool. Weekly time frame. No significant moving average on the weekly time frame to support us here, but we definitely do on the daily time frame. Right, we've seen that. So there's a strong piece of basic analysis, strong moving average there, a major moving average, which is still continuing to the upside. The 10 and the 20 have crossed over the 60. The 60 is now curving up. All of that is looking bullish. All of that's looking good. With a little golden cross here, we should be topping out sometime soon. As I often point out, golden crosses often signify short-term tops. Then we come back and move higher. And like as I point out with death crosses, death crosses tend to signify short-term lows. You know, they tend to be the opposite of what the signal represents. They may confirm it later, but in the short term they tend to do the opposite. So, broke the channel, found support the trend line. The next thing I would point out, as I pointed out to my patrons, is that when we look at what we've retraced, you'll see that we've given up 50% of our move up. So here's the 250, and here's the 50% line, the blue line. Ping, 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 ping. Did not want to give up more than 50% of this move up. What is the standard retracement for a wave 2? It's the 50 to the 61.8 to the golden zone. That's why we have this fib set up this way, because that's what we're looking for a wave 2. We've come straight to the 50 and we've bounced. So that's bullish as well. That looks positive as well. What is next to look at? Well, next thing we've got to look at is our series of pitchforks. So our most recent one is this pivot. This is based off of the idea of a completed 1, 2, 3, 4, 5 into a 1, 2, ABC. As you can see, let's just turn off the moving averages for a moment as they're starting to get in the way. And you can see how there was support with this candle, this candle, this candle along the line here. We had support here along the median line. We had support here along the median line. We tested the median line here. Once we've established our pivot, we've got to move up to the 38.2 and move back to the outer band and then move to the median line. So this pitchfork is still holding at the moment and has proven to be correct. I did point out this in a previous video that if this pitchfork is correct, it is bullish and it would hold. I didn't think so. I wasn't convinced, I should say, at the time, given the price action, but it has later proven to be correct. Next pitchfork. This is the pitchfork which suggests two possibilities. So we are going to have to return to Elliott wave momentarily. We've broken the primary bound of the pitchfork. So 1, 2, 3, 4, 5, A, B, C, out the inside bound or the major bound to the outside bound here. Bounced to back to the inside bound, bounced back to the outside bound, bounced on our way to this median line most likely. So two ways of interpreting this. Excuse me, let's just bring it back. Two ways of interpreting this, which is 1, 2, 3, 4, 5, 1. A, B, C, break the pitchfork. 2, new pivot now in order, which is this pivot here, which we just looked at a moment ago. Bear with me, which is this pitchfork now, having changed pivots into this 1, 2. So that's one way of looking at it. Let's just undo all of this. The next way of looking at this, and this is one, a couple of our members support this idea, is that you've got 1, 2, 3, 4, and 5 to come. Right, we spoke about this in the last video as well. It is technically possible, as we didn't break the extreme outer bound. We did break the inner bound. I lean more on the idea of it being a 1, 2 than a 3, 4, but it being a 3, 4 is possible. In which case we will come to make a new high, and any time beyond this 3 we could put in a 1 at a larger degree before breaking this pitchfork properly and coming down. But even this count is bullish and we won't make new lows. So even that count is bullish. So the Bulls have got the ball in their court at the moment, and they are in a stronger position. So let's look at, in log now, the primary 1-2 cycle. What I find interesting about this here, this pitchfork, on the daily time frame, this is the primary 1-2 pitchfork pivot. We can see how we had all this snagging around the 61.8 here, here, 50 here, 38.2 here, and then median line, median line, median line, did not want to break through it, broke through it, found support at the 23.6, up to median line, back to the median line, up to this 23.6, channeling between these two levels here, back to the median line, test, 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 break, back test of the median line, down, up, back through it. So it's been in play the whole time, and it's been in play all the way since 2019 onwards. So this is the primary pitchfork. If this is the case, and we've gone 3, 4, and this is 1, 2, then we've got a long way up to the top of this pitchfork, and I think the top is the target. So 1, 2, 3, 4, 5. I mean, this is in $200,000 territory up here. We don't have to make the top of the pitchfork, but I see no reason why we wouldn't. This is the same primary wave degree. The same primary wave degree. What are we doing for time? 28 minutes. So we've been chatting for a little while now. We've covered our pitchforks. I've covered everything I want to talk about there. Right, so let's bring up our indicators for a moment. So drawing this bearish divergence, high, lower high, which was leading up to this current correction where we had high, higher high. We've since reset the RSI by tagging the oversold territory here and breaking this downward trend with a move back above it. Okay, so that's quite bullish. We've done around what I call a round trip, which is overbought to oversold and then a move back up. We've crossed over the zero bound on the daily time frame on the MACD. Okay, so both the moving average and the signal are now back above the zero bound, which is also positive. Also having broken this previous downward trend on the MACD, that's also positive. So that's good. We've got some nice green bars on the histogram here, slightly losing a bit of momentum with a darker green bar here, but the average is racing away from the signal, so no sign of it rolling over just yet in any significant manner. So that's all positive. A return to bullish momentum, confirmation with the RSI after completing overbought to oversold, a break of a downward channel, a bounce off a major median line sustaining the move within a pitchfork, bouncing off a 250-day moving average, blah 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 blah. Support was found. That's it. Inverted commas, support. That's what happened. Okay, so that's really all I've got to talk about. I wonder if it's worth me going over the macro count. This is 30 minutes. Alright then, we will. I don't want to spend any more than 10 minutes on this. So I said to some patrons just the other day that I was working on an uber bullish macro count. So we're going to come out to the weekly time frame for this. Stay in log, auto the chart. Okay. Uber bull macro count. Now I'm not saying this is correct, I just think it's an interesting idea. Okay, so and don't chew my ears off about using a chart which doesn't go back before 2012. If you take the previous move up, you're still in this channel. Okay, so just let it go. Right, so what we've got here is an insanely bullish count, just stupendously so. And it works on the idea of a wave 3 at super cycle degree. Now this could be cycle degree, this could be primary, this could be intermediate, this could be minor, and this could be minute. You could scale all of this down one wave degree and still be happy. I just think it makes labeling a hell of a lot easier if we start at a larger cycle. So whether or not you think this is enough time to do it, I don't know. I don't care. It just makes things easier. So the idea is we complete a super cycle wave 2 and everything since is super cycle wave 3. But it's a massive extension within a super cycle wave 3. It's a 1, 2 at cycle degree, 1, 2 at primary, 1, 2 at intermediate, 1, 2 at minor, which means you are going to go into the 3 here at minor degree, of the 3 at intermediate degree, of the 3 at primary degree, of the 3 at cycle degree, of the 3 at super cycle degree. So I don't think I need to explain what that means. It means that if this is correct, and I say if, big if, it's the same kind of move we can expect over the coming 3, 4, 5 years, because that's the time frame we're talking about. Multi-year time frame at super cycle degree. It's the kind of move that if you told somebody when Bitcoin was $1 or when it was $100 that it would one day reach 64,000, they would have laughed in your face. It's going to be like that. Okay, but on an order of magnitude, so much bigger, because it's the free of the free of the free of the free, right? So the aggressiveness and bullishness of this wave, if it works out, will be absolutely mind-bending. I don't know what that means, really, from an economic point of view. You could argue it's just inflation gone completely out of control. Or you could just argue that it's not just El Salvador as a country which adopts Bitcoin. It could be another one, two, three, half a dozen, who knows, right? It could be possibility. So this is just an uber bullish count, and I don't want you guys running away with this and going off and saying Tom's predicting a quadrillion, billion, trillion dollars value of Bitcoin. I'm not doing any such thing. I'm just saying if this is a massive third wave extension, then the top is not really worth talking about at the moment. Because I don't want to have people laugh in my face, just like they would have done back here at £1,000 or 100 quid, because if I told you what I was expecting, you would. But suffice to say, cray. Alright then guys, we'll wrap it up there. We've covered everything I want to cover. And for the meantime, like I said, until or unless those lows break, the ones which had me all confused about price action, about whether or not it was bullish or bearish, until those lows break, I'm bullish, and I'm going to stay bullish. And if I see a completed 5-wave structure, which will come, here's a 1, okay, what am I doing? Here's a 1, here's a 2, this I think is a 3, 4, 5, 1 at a smaller degree, 2 at a smaller degree, I'm a buyer, because then we're off in the 3. Okay guys, that's it. Thank you very much for joining me on this technical analysis of Bitcoin. I hope you've enjoyed it. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Thank you as always to my Patreon subscribers. Your support is enormously appreciated. If you're interested in becoming a patron, there's a link in the description below. Head over to the Patreon, have a read of the tiers, see if there's anything you like. It's still a great time to sign up as it's early in the month. And if you're not following me on Twitter yet, there's a link also in the description box below. Alright guys, take care, all the best, and I'll be back with you soon. Bye bye.